Hello, everyone, and welcome to the new edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from X. Today, I'm joined by Brandon Munro, not Chief Executive Officer, but Executive Chairman and Managing Director for Bannerman Energy. Brandon, great to have you once again in my show.
Thanks, Lucian. It's great to be back.
Thanks, Brandon. Let's start with the overall uranium market. Where are we now? Where are we going next?
Well, I think the end of the pullback has been called. So for people who might be joining this sector for the first time, it's been a long bear market since 2011. And I think we really comprehensively concluded last year that it's the end of the bear market. And things really shot up quickly into triple digit spot price and peaked at $107 a pound in early January.
Yeah.
I think some of the investors who haven't been on the roller coaster for very long might have got a little bit nervous because there was a pullback on some very thin volume in the spot market, and it came all the way from 107 down to 83. But that really has bottomed, I believe, and there's enough commentators out there who share that view that I don't think I'm an outlier there. The question now becomes, well, how quickly does that retracement correct, and how quickly are we back into triple figures? And I think there's a pretty good scenario for arguing that over the course of April, we'll be back in triple figures. So we're trading almost at $90 a pound in the spot market as we speak. So it won't really take much demand at all, given how thin it is in the spot market, to be back in the hundreds. And all the meanwhile, the term contracting price, which of course is what makes the sector go around, has continually strengthened. And the last print that I saw at the end of last month was $75. And I think when we see the number quoted for month end for March, I think it will probably grow from there. So a steady march up in the term price, a bit of volatility on spot, which creates opportunities, but also can be a little bit unsettling for investors new to this sector. But overall, the trajectory is certainly moving up, whether it's short-term volatile spot, medium-term, term contracting price, or if you're just talking about the sector dynamics and the longer-term demand and supply picture, it literally gets better every month.
Yeah, agreed 100%. What about uranium equities performance and company valuations? Would you say that they are now undervalued, overvalued? Definitely not overvalued, but are they fair valued, undervalued? And I mean, we can separate this for Australian-based companies and TSX and US-listed companies, because I believe that ASX maybe are a little bit more undervalued than the TSX. Would you agree on that?
It's a little bit hard for me to compare the exchanges. I mean, I'm in the ASX daily at the moment. I've got a long history with ASX. It's been a feature of my entire career for more than 25 years. So I'm a bit careful about commenting on transitory aspects of TSX and the US exchanges. I think to answer your question for ASX, the equities have been slow to catch up to what we've seen in the spot and term market for that matter. That doesn't surprise me, and I can explain it in terms of uranium equities are still a tiny little blip in the general natural resources equity market out there. And when the tide's going out generally for resources stocks, as it has been for the last 9 months, to have any outperformance on that in itself is an accomplishment. And uranium stocks have definitely outperformed the broader market, there's no question. But when the tide has been washing out, it's very hard for them to keep up to what we're actually seeing in reality in the uranium sector and the physical uranium market. So on the one hand, that's been one of the difficulties that uranium equities have had over the last few months, and that's curtailed the excitement to a large extent. But on the other hand, I think it certainly talks to better times ahead, and general investors and generalist funds, they've got something that they can really look forward to as uranium equities catch up to the very positive situation we're seeing in the physical commodity market.
Yeah, agreed. Let's discuss your project, the Etango project. This project, as we know, is shovel-ready, fully permitted project. Can you walk me through the remaining process you need to do before you extract the first pound of uranium?
Well, Lucian, you're right. Since we've last spoken, we have now chalked up that major milestone of being fully permitted.
Yeah.
And that came right at the end of last calendar year. So it was missed by a lot of investors just because of the unfortunate timing. And that, for anyone coming new to the Bannerman story, that was the grant of the mining license in Namibia. Our Etango project has been a long-standing discovery that we made in 2006 in Namibia. We've been working extensively on that ever since. We put out a DFS on the initial mine life at the end of 2022, obtained all of our environmental permits, and then the final cherry on the cake was receiving our mining license at the end of last year. So that's great. That puts us in a really special place. It puts us in a very small number of greenfields uranium projects worldwide in the investable universe who are capable of bringing any level of scale of production in over the next several years. And that puts us in a really rarefied air, I think. So what does that mean in terms of next steps? Well, we're already undertaking some of the early construction phase of this project. So as soon as the mining license was granted, Gavin Chamberlain, our CEO, and his team immediately launched two long lead item contracts. The first was for the construction water pipeline. We didn't want to find ourselves needing to truck water in to make concrete and other construction water activities. It's expensive, it slows you down, it makes you very vulnerable to short-term disruptions that can really interfere with an effective project management process. So we immediately invested in starting that pipeline to provide desalinated water for the construction. The bigger pipeline for operations, that can come later, that's all fine. And the other contract that we awarded was the access road to their site. And for similar reasons, when we're ready to start our site works, we want to make sure that everything is going smoothly, and having a perfectly constructed access road just makes life a lot easier for all of the equipment that needs to come in to start earthworks and other aspects of construction. We've also completed the front-end engineering and design. That was a major engineering initiative undertaken since we completed the DFS. For many of your audience, they would know that typically you go from DFS to financing and then into front-end engineering and design, and then into detailed design and then construction proper. So a lot of what we've been doing has been, in the ordinary course, a post-financing exercise. In our case, we've been very fortunate because we've managed to really be very prudent with our cash balance. At the end of the year, we still had $35 million in the bank. I've guarded that jealously, and I've made sure that we've really extracted every last cent of value from what we spend. And as a result of that, we've got that flexibility to start these long lead items to continue into front-end engineering and design. And now we're getting to the point where we're quite happy to start spending a proportion of that cash balance on detailed design. All of this is moving us along really the ordinary course towards operations. At some point between now and when we start some of the big contracts like earthworks, we'll need to secure the broader financing package. And this probably more directly answers your question, Lucian, about what are the next steps. So for now, it's about financing. There's an interrelationship between financing and long-term contracting, where we see a big opportunity because of the way the market is evolving right now and the very peculiar timing with which we're able to bring our project to market. We see an opportunity for industry money to play a big role in that financing. And so at the end of last year, we announced that we had commenced a strategic financing process. We appointed some advisors, both here and in London and Beijing, who are very experienced with uranium transactions. They've got a number of the key transactions over the last decade or so under their belt. And they're assisting us and guiding us towards understanding to what extent is industry money able to create let's say, a better result for our equity holders than going down a very traditional project financing path. And that's where we're at the moment. That's the situation that we're in.
Okay.
It's a very favourable position because of the way the market is evolving. Quite frankly, the uranium price is doing an awful lot of the work for us right now with that process. And I think also when you look at the way that the nuclear sector and therefore uranium has fundamentally repositioned since COP28, we're also seeing the impact of that in the work that we're doing with strategic financing. We're seeing the change of attitudes amongst both industry players and groups from outside the industry who now realise that they have to be having a very good look at uranium.
Yeah. You explained technical side, financing side, but what do you need to do next from the environmental side and social standpoint?
Well, fortunately, we have all of the environmental permits we need to both construct and operate the mine. And that's been a long process. I was first involved in that process back in 2009 when I moved to Namibia and oversaw the environmental and social impact assessments and the consequential applications for our environmental clearance contract. So that's a very long baseline that we've had to work with and have all of those clearances in place. We also have our heritage clearance, and we don't have any of the sensitivities or issues that we sometimes see other big resources projects curtailed by. So we're grateful and pleased with that. On a social side, we've got a great relationship with the community and we don't see that changing for any reason. We're keeping them up to date. When I was in Namibia in January, we had 2 really nice functions with the local community and obviously a bunch of other interactions at that time. And you've got to remember, this is Namibia. It's not the first world. It's not a country where people have got a whole lot of choices about what they're prepared to develop and what they're going to outlaw. This is a country that's spent 45 years enjoying the benefits from uranium mining. They're totally comfortable with uranium mining and they want more jobs and they want more uranium mining. So that social side of things, it doesn't have that edge to it that it does, for example, where I'm sitting here in Perth, Western Australia. It doesn't have that risk to it. You just, as long as you're respectful and as long as you do things the right way, and you're quite happy to be held accountable to best standard and best practices, then Namibia is a perfect place to be operating.
So you don't see any problems with skilled labor for your project when you move it forward? You will secure the skilled labor. I mean, the majority of the people on site will be from local community, right?
Correct, yeah. So there's a few mitigations. There's anyone who says there's no problems with execution or construction is either naive or they're having you on. Okay, so the whole construction process is a continuous open-ended exercise in problem solving and risk mitigation. That's why we brought Gavin Chamberlain on initially as Chief Operating Officer and then as Chief Executive Officer. Now, I felt very strongly that as the company goes into the process of building a mine, it must be run by somebody who's made a career of building mines. And maybe this is an opportunity, before I come back to answer your question, might be an opportunity just to touch on Gavin's experience.
Sure, please.
So Gavin's Cape Town based, which means he can get to our site quicker than I used to be able to when I lived in Windhoek, the capital of Namibia. There's daily flights between Cape Town and Walfish Bay, which is a 20-minute drive from our project. And he's got a 30-year career of building resources and infrastructure projects in Southern Africa. And apart from all of the breadth of experience that brings, he's worked both for the EPCM engineering contractors, he's worked for the EPC constructors, and he's also worked on the owner's side. So he had all of the 3 facets that we would really want from somebody who's then capable of understanding the 3 dimensions of the construction business. And to put the cherry on top of that, he was actually the project director who built the Husab uranium mine, which is still the largest uranium mine in Africa and the largest single mineral development in Namibia in their history. So that was an order of magnitude more complicated than what we're doing at Etango. And now we're getting closer to answering your question about labour, I promise you. So, for example, he was a project director. He worked on that for 5 years. And in that case, he had 4,500 people on site constructing HUSAT, whereas we will have less than 1,000. Yeah. The capital cost was almost an order of magnitude greater than what Etango is. It was a more complicated processing plant because they had them tank leaching and tertiary crushing and then milling on top, whereas we're simple as because it's heap leaching with only 3-stage crushing. So I think the main takeaway from that, from an investor perspective, is we've now got a guy running the company where the construction of Etango is so deeply within his proven experience and capability that he's entirely able to think about not how do we build this without messing it up, but how do we truly optimize this build? And then to answer your question about capability, through Gavin's experience, he's then introduced a number of changes to the ordinary operating procedure to address just those issues. So just one example. Normally what happens is when you've finished your DFS and you've finished your front-end engineering and design, you then put the various contracts out to tender. So what Gavin did working with Wood PLC, who are our lead consulting engineers, is he had a really good look at the Namibian market and he figured, look, the more Namibian content we can get, the better. Number one, it's good from a local community and a government point of view. Secondly, we didn't want to build a construction camp on site. And we figured if it's Namibian contractors, they're going to be drawn out of the local community that doesn't need to be accommodated. And thirdly, Namibia got hit really hard during COVID. And as a result of that, the Namibian contractors, they're hungry. They want the work. They're very competitive. And so what we did is, at the cost of only a small amount of additional complication to the process, Gavin broke down these tenders into small parcels and small packages so that they were right-sized for the local Namibian contractors, so that we didn't have to bring South African contractors across the border with all of that extra expense and all of that extra complexity and questions about work visas and all of that. And that's now been super effective because we're getting those tenders back and we've seen the numbers, and true to form, the Namibians have been very competitive and very eager to win the work. And then where it's really played out well is, as many of your audience would know, Paladin Energy, the giant Australian uranium company, giant compared to us, they're finishing now the recommissioning of the Langer Heinrich uranium mine, which is about 60 or 70 kilometers from us. The great thing is they've had 600 or 700 contractors on site doing all of that recommissioning work and changing the plant design in some respects and optimizing it. And they'll be coming off site at about the time that we want them to start doing work for us. Excellent. So we've got all of the advantages that I talked to with the Namibian contractors, and they're also match fit now because they're just coming off this big job where we understand everything's gone really well. So that's sort of how we see mitigating risks around construction workforce. When it comes to the operating workforce, that's where we just happen to be very fortunate to be in Namibia. So the reasons are, there'll be 3 operating uranium mines by the time we come into operation. That's a big workforce to draw from. We are still relatively small, although we've got a big output. Remember, we're heap leaching, which is not particularly labour intensive. And so at our peak, we will employ about 760 primary employees, including our contractors. So in the Namibian context, that's not a big mining workforce. There will be a well-skilled workforce that are working already in the uranium mines amongst those 3 mines. But more importantly, the Rossing uranium mine, which Rio Tinto operated for 45 years, that was like the mine school in Namibia. So just about everyone in the mining sector who's been in it for more than 10 years has at some point cycled through Rossing or one of the other uranium mines. So they might be off working in gold, or they might be in zinc, or they might be in copper or lithium at the moment. But there's a good chance that they had their start at Rossing. So there's a lot of uranium experience, even if it's not working today in uranium. And there's a couple of those mines that I mentioned in those other commodities are reaching the end of their life. And so we'd expect to really create some great opportunities for employees who are perhaps finding themselves at the end of the road on those mines at about the time that we want to start operating.
Yes, and when are you starting? When are you targeting first production? In ideal circumstances, when are you expecting to start production?
It will be in full production in 2027. And the reason that we've been comfortable using our cash balance to keep moving forward with some of these front-end contracts and with detailed design over the course of this year is so that we can have confidence that we'll be in full production in 2027.
That's okay. That's great. Etango has at $80 uranium, 440 something like that NPV post-tax, and 2.9 years payback. Have you done the math at $100 uranium, maybe, or even more?
Well, obviously, we've got a model that tells us exactly what's happening there, and it is spectacular, as you would guess.
Yeah.
But what we did do last week to, I think, help investors understand what our project looks like at a higher uranium price is we put out a study, and thank you for throwing that question to me where I can talk about the study, Lucian. So we put out a study which examined, well, what would Etango look like with current uranium prices extended over a longer period?
Yeah. Yeah.
So the first aspect to that is, as you say, even an $80 price assumption is going to look a bit thin. But the other aspect is we've got the capacity to extend and expand our mine. And that's always been in the plan. I hadn't really been able to talk about it very much in the public markets because we didn't have any numbers that we published, and that's now all changed. So with the expansion, which we've called Etango XP, the assumption for our study is that we expand our production after 5 years of operating, which means we'd have to make the final investment decision after, let's say, 2 years of operating. So we've constructed Etango. We've been operating at 3.5 million pounds per annum, which unexpanded is a 15-year mine life that then gives rise to that $465 million NPV post-tax that you mentioned.
Yeah.
But after 2 years, we'd make a decision. Great, uranium looks good. We can get contracts to lock in these fabulous prices. And then we would double our production circuit. So instead of, at the moment, with the Etango 8, we would process 8 million tonnes per annum through the processing circuit or the mill. Under our study, we would just simply double that. So we'd take the existing primary, secondary, and tertiary crushers and add another one. And that gives us some advantages because if you're doubling the kit, you can have common spares, which means you don't, for our HPGR tertiary crushers, we don't need to carry a spare grinding roll, which is $8 million or something. And it just brings down the costs. It makes maintenance and training people and employee utilization far superior. And it also means that when we put out a study last week, we're actually basing it essentially on DFS quality numbers, even though we put it out as a scoping study. So that 3.5 million pounds goes to 6.7 million pounds. And effectively what that means is that, first of all, the NPV goes up. So at 95, to answer your question, Lucian, at $95 a pound is the price assumption, we have a post-tax NPV of 974 million US. As you can imagine, put in another $5 a pound or run a uranium price at an assumption greater than $95, and it simply hits our bottom line. The project screams leverage above those levels. but we're pretty comfortable from where we are at the moment with a NPV post-tax that touches $1 billion. I think that still gives investors a lot of scope to understand the value uplift that we can deliver with this project. The other thing that it does is by having that expansion option, it just gives us tremendous optionality and tremendous capacity to leverage higher uranium prices. So what's somewhat unique about Etango 8 and our Etango project, many times when you look at a mining project, not just a uranium project, but pick a commodity, copper, gold, zinc. If you see a mine that's developed in a couple of stages, more often than not, the second or the third stage is a necessary component to get to the best part of the ore body. Or in some way, the mine doesn't really work that well until you complete the subsequent stages. So first stage is about getting into business, but it's a second or maybe even a third stage that's actually about making a mine that's really viable. That's just not the case with Etango. If all we ever build is our first Etango 8, and all we do is we take it from 15 years out to 27 years, which was the alternative study, it's still a great project and it still looks fantastic at an $80 uranium price, and it's spectacular at a $95 uranium price. And again, the study showed us that the NPV post-tax, by simply extending that mine life, despite the fact that it had been discounted so much down to today's values, it's still over $800 million US post-tax. And then finally, what it really does is it gives me the capacity to, when Bannerman gets compared to some of our competitors, to say, well, we've got a pipeline too, We've got our first development at £3.5 million, and then we've got a very special form of pipeline, because rather than developing another asset in another country with a new workforce, with a new regulatory regime, with different standards that you need to comply with a new ore body that you need to figure out, new unions you need to negotiate with, all of that, we just simply press the button on an expansion of our existing operating mine. And because we've got the pure choice as to whether we do that or not, depending on what's best for our company, it's a very powerful form of pipeline that rightly now positions Bannerman as a £6.7 million producer, not just a £3.5 million producer, with a vastly reduced risk profile on what a typical pipeline asset would deliver for shareholders. So I couldn't be more pleased about the results of the study. I couldn't be more happy to be talking to investors about how this becomes a game changer for Bannerman and Etango. And I couldn't be happier with the timing, where it now fundamentally repositions Bannerman as a company at a time when the market realizes that what the utilities really, really need is more pounds over the next short to medium term. And we can deliver that, and we can deliver that at an enhanced and expanded level as well.
Got it. Brandon, what about the exploration potential at Etango? Is there any room for more exploration work, expansion of the resource? What's your opinion on that?
Well, I wouldn't call it exploration per se, but we can certainly drill more resource pounds. So, for example, the current resource at Etango is more than 200 million pounds. That's just in the Etango ore body.
Yeah.
With that expanded or extended scenario that I talked about, that was the subject of the study last week, that will extract 95 million pounds. And if we want more of that, we just simply go deeper. Now, into the balance of that 200 million pound resource. Now, that resource is down to about 300 meters deep. But during the last boom, when we were doing our exploration drilling and our resource drilling, we drilled enough 500-meter holes, even 600-meter holes, to know that the mineralization continues. And there's some expectation that it possibly even strengthens as it goes deeper. So if we want to add another 100 million pounds to that resource, I'm confident that we could do that simply by drilling more under the pit. Now, the thing is that other than giving me some bragging rights when it comes to the comparative tables on who's got the most resources, it doesn't make a lot of sense to do that right now because it's expensive drilling that deep. And what I would rather do is I would rather wait until we've mined down a couple of 100 meters and then drill from there. And then instead of drilling a 500-meter hole, we're drilling a 300-meter hole.
Yeah, I got this part, but I was referring to new targets, new holes. I mean, there is a part of the property, probably big, that is not explored so far, right?
So we do have a satellite deposit, so you're quite right. And that satellite deposit was actually discovered during what's called the drilling that you do to make sure that you're not about to build infrastructure over a potential deposit. So it's called sterilization drilling. So we discovered we went sterilizing a certain area and we went, oops, just as well we didn't design our plant to be above this because we've now hit mineralization. So we put about 200 holes in that, probably 15 years ago. We published a JORC 2004 resource. We decided that it's not a high priority, so we haven't tried to update that resource, which is why I don't talk about it, because the amount of disclaimers that you would need to introduce. But anyone doing their research, as I'm sure you do or your listeners do, if they went back to the old announcements, they'd see that under JORC 2004, that was a 42, 43 million pound satellite deposit. And again, if we could make that bigger by doing some more drilling. Now that's an easy trucking distance from where we will be putting our primary crusher. So over the decades that this mine is likely to operate, I'm sure that we will mine that. It's just not the priority at the moment. As for your question about greenfields or generative exploration on our mining license, it's not really the phase that we're in. It doesn't cost much to get a new brain, a new way of thinking, a new thought process applied to the existing data, which is something that I'm keen to see. But unless that throws up a new concept or something that can get our team of geologists excited, with that many pounds already feeding a decades-long mine, we probably wouldn't spend a whole lot of money on exploration unless we come up with something new.
Okay, fair enough. I wanna touch a little bit on the offtake. Do you see more interest parties knocking on your door, asking around? My question is, what is your offtake approach and strategy?
Yeah, it's a good question, and we do have a very cohesive strategy. So the first point is that we've been talking to the utilities consistently for years. So the first utility meetings that I had were in 2016, and we've used a very collaborative approach since then, so that we weren't just nagging them, we weren't banging on their door with sales calls, but we were working with them in World Nuclear Association committees and other initiatives. And I would regularly be on panels with utilities, which involved the inevitable level of contact and discussions. And so most of the utilities have been well aware of Etango for some time. Naturally, because of where the market's at the moment, the utilities have had a dramatic uptick in their interest in talking to us, and we've welcomed that. And so the intensity of those discussions has increased. So that's the first step. The part of the strategy was to make sure that we're well known to the utilities well ahead of any point where we want to develop a sales or a customer and seller relationship with them. And that also suits the general way the nuclear industry works. So the second part of the strategy was to make absolutely sure that we had the corporate, technical, and investor patience to enter the market when we felt it suited us the best. So if I work through those, so the patience from a technical point of view was timing the technical work and so that they would mature just as the market matured. And that was not as simple as it seems, because a lot of these timing decisions we were making in 2019, 2020 when we released the scoping study for
Yeah.
Etango 8, the development pathway that we're on at the moment. And I'm really pleased to say that we got that bit right. And apart from timing it, as I said before, we've then been able to continue through with front-end engineering design and now into detailed design. And that's the second important part of being patient, which is being very financially and fiscally prudent, so that we've got a big cash balance that gives us the capacity to be patient. We're not getting pushed into a corner because we've got to raise money or because we're running out of funds or we can't fund what we're doing. We've got to, at the end of last year, we had $35 million in the bank. We're not spending it very quickly. And so that gives us a lot of runway so that we can move things forward at a pace that's at our choosing. And then, so that's the corporate side. And then the final side is the investors. I've been at pains to explain to the investing community and our own shareholders that we've been working on this asset for more than 15 years. And we've been very patient. Our shareholders and investors have been incredibly patient. Now is not the time to lose that patience. Now is the time when all of that work over the last 15 years will actually come to make the big difference for shareholders, and getting that timing right is vitally important. And so what I think I certainly hope I've managed to achieve is that the investment community understands that we're not putting deadlines in front of ourselves. I'm not out there to be saying we're going to do this by then and you can hold me accountable to that. No, you can hold me accountable to the end result for shareholders, but I'm not putting any artificial deadlines in front of us. So that's the second aspect of the strategy. Make sure that we're patient in every dimension so that we can time the market according to what we think is the best. At the moment, with a $75 term uranium price, I think that deserves more patience, let's say. And I think probably most of your audience certainly have a similar view.
Definitely.
And then the third aspect of it is more of the nitty-gritty around our contracting strategy, which is understanding under which financing scenarios we're going to need what proportion of our production to be committed, achieving the balance between market-related contracts that give spot exposure, leaving some of that production for basically spot exposure closer to production and all of the trading opportunities that creates. And then what proportion do you then lock in at fixed escalated prices that just give you a really strong baseline with which you can achieve minimum returns.
Okay.
That's a bit of a complex strategy, particularly since until we've understood better what role the strategic financing is going to play, we don't quite have the right targets on what proportion we need to contract with. We've got the scenarios and we're working within those scenarios, but until we know the answer to the financing, we won't know exactly what the requirements are for contracting. So we're trying to stay a bit flexible on that count as well.
Got it. Brandon, how is the Chinese-Russian influence in Namibia right now? You lived in Namibia for years. You're operating a project there. There is no better person to ask that question. Do you see with every year conditions for doing business in Namibia improved? And like I asked you, how is the Chinese-Russian influence over there right now?
Okay, so on business conditions, yes, it's constantly improving as the country becomes more mature. There's probably a large portion of your audience that don't know Namibia that well. So a couple of little basics that I think everyone will find interesting. First of all, Namibia was the very last African state to become independent. So it's only been an independent country for 34 years. Now, why that's relevant, number one, the Namibians were able to look at sort of what went wrong with other wars or struggles or independence and what mistakes were made by early governments on the rest of the continent. And they have truly been good students of that in the way that they've governed over those 34 years. The Namibian government has never made any of the, let's call the classic African mistakes of new governments. So that's the first thing. The second thing is the way that Namibia gained its independence. They had a short struggle or a struggle of independence. They don't even call it a war in Namibia. We're a bit too chilled for that. But they had a struggle essentially against the South Africans. Now, the rest of the world sponsored the independence from South Africa. So it was actually a UN resolution that eventually South Africa caved into in the early 90s that granted Namibia its independence. So the importance of that was the whole global community supported Namibia with its independence, except for South Africa. And then very soon after that, South Africa became a democratic state a couple of years later in 1994. So then all of that was forgiven as well. So because of that, Namibia's maintained very broad and very good bilateral investment, bilateral relations and multilateral relations with pretty much the entire world. It truly doesn't have any enemies, and that's enabled it to remain on very productive and friendly relationships with the West, with China, with Russia, with its neighbor South Africa, with other African nations. It's given it a very broad perspective from a geopolitical point of view. Now, what does that mean for the influence of Russia? Well, it means, yes, they're active in the country, but they don't have an overbearing influence, because that influence is balanced off by the influence of China, which is balanced off by the influence of the US, which is balanced off by the influence of Europe, Australia, Scandinavia, and various other countries, including, South American countries. So it's got this beautifully balanced perspective on multilateral diplomacy. And the point about China as well, China's obviously very prominent in the uranium sector in Namibia. And frankly, China would be that prominent in every uranium sector if they could, because they've got this enormous demand for uranium, particularly over the next 20 or 30 years. But they've got a good operating record in country. The BNNLF, the Chinese giant who operate 50% of China's nuclear power plants, they bought Rio Tinto's share in the Rossing uranium mine only after satisfying Rio that it wouldn't present any headaches or hangovers for Rio's reputation. So Rio wouldn't sell the asset to somebody who then is going to tarnish Rio's long-term reputation. And they've operated it magnificently. They've left it to the local management team. They've fully supported all of the long-standing ESG initiatives and social initiatives that Rio had established. Really, Namibia couldn't have wanted for a better foreign investor than what CNNC have been. And that's contrary to the experience that many countries have had with other parts of Chinese industry. But the Chinese nuclear industry does march to a different drum. They're very sophisticated. They're very forward-looking. They're obviously some of the most talented people in the entire country work in the nuclear industry. So when you understand it from that perspective, it's not as unusual as it might sound in the African context.
Good point. What's your take on Niger's situation?
Well, it's a long way from Namibia, which
I know
is kind of helpful on the one side, but I've never been to Niger. I've kind of never had a particularly strong desire to go to Niger. So I can only comment on it from afar.
Yeah.
And so I'm always cautious about that, not having the on-the-ground perspective. I can tell you what the industry thinks of the impact in Niger, which is, it's obviously a lot of concern. It's 5% of world production at a time when the world can't afford to lose 5% of production, or it can't afford to lose that production to Russia and China, for example. And I think with the latest geopolitical movements there and what looks to be the expulsion of US interests and the intent of Chinese security to infill that vacuum, I think many consumers of uranium around the world now are expecting that Nigerian production won't be very secure to them over the long term. So what does it mean for everywhere else in the world, and in particular for Namibia? I suppose it opens up opportunities. I suppose it further differentiates Namibia from other production centers and other parts of Africa. Fortunately for my day job, the uranium sector and the nuclear sector understands Namibia really well. So as much as I spend quite a bit of time explaining to investors why Namibia and Niger are totally different, I just don't need to do that in the uranium sector. Everyone in Namibia, everyone in the nuclear industry understands Namibia and understands that it's fundamentally and totally different to Niger. So the good news is I haven't had any contagion from what's happened in Niger. If anything, it's just reinforced the importance of Namibia as the world's third largest producer of uranium.
Okay. Brandon, is the US uplisting in the cards? I know your stock is trading on OTCQX, but would you see your stock on the bigger stock exchanges maybe in the future?
Not foreseeable. I'm not going to say never, because very much depends on what happens in the sector, but it's not on the cards for us. And I'll tell you why, Lucian. It's to have a foreign listing that has its own compliance regime. It introduces a lot of management and corporate distraction.
Yeah.
And we've got very good at running on a lean team. It's been part of the formula for ensuring that we've spent our cash very frugally. It's been part of the formula for ensuring that we find ourselves with this timing and being patient. And I'm very reluctant to start reversing some of those wins. And a listing either in Canada or in the US, it involves a new compliance regime, new reporting. We would need in Canada, we'd need to go back to the days where we were issuing NI 43-101s. And frankly, I would rather Gavin Chamberlain and his team be focused on solving execution challenges than preparing a 300-page report to satisfy Canadian regulators. It's just a better use of our resources. And I appreciate that, look, there's a lot of investors who'd love to be part of the Bannerman story, who find it difficult. That was part of the reason why we've elevated our OTC listing to a QX. And I'd hope for some of those investors, they can find their way onto the register through QX. And look, for everyone else who can't, all I can say is, look, I'm sorry. I'd love to have you as part of the story, but we can't be all things to all people, and we just have to remain focused at this point.
Yeah, definitely agreed on the paperwork for new listings. So you have my vote here. You mentioned your cash position. It's 35 million. Are you covered for 2024?
Yes. Oh, well and truly, yeah. So, even with all of the technical work that we're doing, if we exclude some of the big ticket discretionary items like long lead item orders or contracts that we may or may not let, if we exclude all of that, in very rough terms, we're spending about $1 million a month, including on the other technical work. So, there's 12 million this year, plus whatever discretionary expenditure we choose. And to give you an idea of how much leverage we can get from that cash balance, I talked to you about those two contracts that we awarded at the end of last year. So one was the pipeline for desalinated water to enable us to construct the project, and the other one was the access road to site.
Yeah.
So the combined total of those was about $2 million US. So we get a lot of activity and a lot of work and a lot of de-risking done for a relatively small amount of money.
Okay. Final question, Brandon. News flow from the company. What news, when can investors expect in the upcoming period?
Well, we're a pretty mature development play at the moment, so it's easier to describe what news flow we won't be putting out. We don't need any news flow when it comes to permitting. So unfortunately, there's not that catalyst. That came and went at the end of last year. From a technical point of view, we've completed the studies. There'll be a little bit of generalized news flow as we take further steps towards construction. So really, it's down to the big ticket items here, which is key news flow in the industry itself. And I think that is relevant because we're so advanced and it's such a big leveraged project that positive news in the sector necessarily flows directly into the value proposition represented by Bannerman investment. But also it's been about significant steps towards financing and offtake, and then ultimately construction. So they're the big ticket news flow items for this year. In the meantime, I'd encourage investors to follow what's happening in the uranium sector, and I think compare those dynamics to the attributable valuation that Bannerman has, and realise that I think it's a really good time to be having a close look at the company as an investment proposition.
Yeah, that was Brandon Munro, Executive Chairman and Managing Director for Bannerman Energy. Brandon, thank you for coming to my show, and I wish you luck with the Etango.
Thanks, Lucien. It's always a real pleasure to be talking to you.